Hello, folks. Andrew Cardwell here for your Daily Five. We live in some very interesting times, which I think are going to be coming very exciting times. Looking through the charts, looking through what's happened in the last couple of weeks, we're in for some reversals and some accelerations in some trends, but reversals in others. When I look for acceleration is when I look for the RSI to what I've taught with my range rules to see the RSI get above 60 and start climbing, and also the moving average of my RSI. I use a 9-period moving average. This chart that I have up is the Dow Jones. And for those of you who have seen my work and heard me before, I can set positive and negative reversal targets from certain patterns that I've taught over the years. Positive reversal pattern will suggest a higher price in the future that I'm setting as a target. It's initially a resistance level, but when it closes above that target, becomes an acceleration. We had an acceleration. We had a move with one of these positives based on the lower RSI and higher price, and I draw a line. Well, that target that I mentioned in Twitter a few times, 35,641. And that was based on the previous high in momentum close with the RSI. The one at the bottom is my CFG. That's my personal RSI. But that target was above the 35,625. And somebody said, well, your target's 35,641. That's net money points. I said, if it closes above it, you'll see the points accelerate. But all those attempts could not get above it. So the signal to me looked like it was a potential failure. And when you're in a trend and setting targets, if you have price targets on the upside as objectives, and you're not even getting to them, then you're probably not going to close above them. So this is where patience comes in. And it looked like a failure, and so far has proven it to be. That green line is a 9-period on close. The blue center line in these bands is what I call my number. I take moving averages on highs and lows and set boundaries on the number. Well, that 9 closed below the lower band. And that's when that low was made. But since then, we've only bounced back up in price to the high band, and the RSI never accelerated the moving average through the 60 level, which is part of my bands. This looks like we have seen some sort of intermediate top. I think we are living in very interesting times with everything that's going on. But if we look at the Nasdaq, I just want to go through a couple charts. We look at the Nasdaq, that was very overextended. And that 9 moving average not only rolled over, it turned down and crossed the high line, the number, and the low line. And the RSI was finding resistance at the moving averages. I use a 9 and a 45. Down at the bottom, you'll see what I talk about with positive and negative reversals. For the Nasdaq, this closed 15,515, and then the CFG bounced back up to 15,329. Well, the CFG value got higher, but the RSI value ran into resistance, and the CFG at the bottom, it went to a more overextended level in the momentum, but the price was lower, and that's one of my negatives. So that suggested much lower prices. The targets I had down there have already been achieved. The 9 has dropped below the lower band moving averages, and the RSI is getting down below 40, breaking the 40 level. The downtrend bands are ranges are 60 and 20. Uptrend for RSI is 80 and 40. Well, we're breaking 40, and the moving averages are breaking 40. So I would not be surprised that there's a lot left on the downside. This is October, and in October, the stock market usually makes a low. and bounces and turns up and everybody's trying to buy the dip. I would be very cautious on that because I'm seeing more and more evidence that this high in the S&P, in the Dow, in Germany, in England, it could be a big move worldwide in a lot of the markets. That's why I said there's going to be some accelerations, and this could be an acceleration just starting on the stock indices. Let's take a look at crude oil, because I've been bullish crude all year, and I don't see any reason I need to change it because I'm waiting to see it break 80. I mentioned this a couple of weeks ago when it had that first correction back down to about 65 or 63, that was just merely a correction and that we were going to turn and go higher again. If we break 80, I got targets at 83 and a half, 84, some as high as 85 and a half, 86. But the breaking of 80, look how strong this has been ever since the red line's pivot points, and some people call them swing points, others pivots, different formulas, different people. But this has served me well over the last 30 years that I've taught. That red line's the pivot point. It leads the moving average. You notice that moving average was below, came down below the low lines. Then it started rising. Look at the RSI. Still holding my range rules. Never went back below 40. Now we're starting to get an acceleration because the high line has been broken again. Should get the arrow. The high line has been broken again to the upside. The pivot's leading the 9, the 9's support all the way up. That's daily. If I take a look at the weekly, weekly, nice and smooth. It broke, kept coming. Price pulled back, but the moving average stayed above the high line. We had divergence in there, and folks, divergence is not a reversal pattern. It's just showing that it's overextended, needs to correct into one of my positive reversal patterns. Coffee, I've been bullish since it was $1. I think we've made a correction. Get the coffee up here. This is weekly on coffee. We were bullish when it was down around $1.05. Then a retest. And it started up. RSI moving averages started up. We really didn't get too many bearish divergences, which is indicative of strength. We had a pullback, but then price accelerated back up. We look at the weekly, looking at the monthly, it's just starting. And I've had a $3 target since, last summer. Looking at the longer term monthlies, it's been to $3 before. It wouldn't surprise me to see $3 again. So we're in a point where we've got up over $2. We've pulled back. Now we're starting to see right here that the 9 moving average on a monthly basis is getting ready to take out the high line. My CFG has stayed above its 45 moving average, and the RSI is finding support at the 9, and now has gotten up to, we don't need that on there. Let's see. RSI has gotten up over 60, and the moving averages are turning that way. The same thing they did on the weekly when they turned up before. And RSI never really came back below 45. So that's a sign of strength. Now each pullback has been supportive to the high line or the low line, and that 9 on close is still staying positive. Crude, Dow, coffee. I think once we see coffee get back above $2 or $2.15, we'll see $2.50, $2.75. The same as the crude oil, getting back above 80 to 83, 84. then we're going to be looking at probably 100 by June. And if the economy is coming back strong, we're going to probably see it sooner, but I'd say probably 6 months. There was one other people have been asking me about gold and silver. I'm still positive gold and silver. Gold builds bases, and there's weekly. It's been pretty much locked in. We've had a correction. The 9's below, but I'm watching because the gold usually makes a seasonal low in October and then moves up into February. Well, here's a low. Here's a higher low. That's basic analysis. We see a little bullish divergence in CFG, and the RSI there came down but never went back below 30. So I'm watching that very closely because I think by the end of the week we could finish a little higher, and by the end of the month have put a low in, and it may have been made last week. Silver, I think, will still outperform gold. Same patterns. Put a low in and follow gold, and it'll be stronger than gold. We look at the weekly. It broke down, and they usually sell off into the first few days of each month. You look for trend changes. When you get in, when you finish a month low and you start the month, you finish 1 month and move into the next and start to see it move higher, then check your technicals and see if it's ahead of itself and needs to correct. We do, as I said, live in interesting times, COVID and everything else that's going on in the world now. I just got my booster shot on Sunday, so I'm fully vaccinated and feel better. I take my time and make sure that even when I get off the couch to go to the kitchen for a Pepsi, I still put my mask on. We need to be all in this together, so let's all help each other. If I can help you in any way, Cardwell RSI Edge is my website. I'm on Twitter at Cardwell RSI, and my direct email is trader011@msn.com. And my clients gave me that email when I was putting a new email together. They said, because you're on the phone all the time and you need the international calling code. But buckle your seatbelts, folks, because it's going to get interesting. It's going to get exciting. Just think in terms of accelerations and reversals, and commodities is where I'm going to be for the next 6 months to a year, because I think that's where the most of the action is going to be. And also, you might want to take a look at cotton. We were looking at it in the high 80s, looking for 105. It just ran right through that. So I think we're starting to see maybe the commodities put that bottom in and turn up. There's a weekly, or a monthly, I'm sorry. There's the weekly. Look how that 9 stayed above that high line. The RSI never even got down below 40. And then one quick look at the daily. That's going straight up. I had positive reversal targets at 105. It went right through there. So there's going to be a lot happening in the next 3 months. So stay on top of it, stay alert, and defense. Make sure you have your stops. Take care, and I'll talk to you the next time we get together. Be safe.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.